I have a very important subject I wanted to address today, so I thought it would be a good idea to go live and talk about it. It's the end of the year already. Can you believe it? We are already in December. Crazy, I know. But as far as real estate and the end of the year, it's very important for you guys to think about taxes. It's almost that time of the year after the holidays. It's tax season. Thank you, girl. It's tax season. So what should you know about taxes and real estate? So when you are in the process of purchasing a house, you unless you're paying cash, you will most likely apply for a mortgage. So when you apply for a mortgage, one of the documents that you will have to provide is your tax returns. But usually, a lender will ask for at least your past 2 years of tax returns. So right now we're in 2020. In this case, if you were to look into buying a house this year or let's say next year, 2022, you will have to provide your tax return for 2021 and 2020. So now is the time for you to think about your taxes. It's almost the end of the year, so this is the time to think about your taxes before it's time for you to file because your taxes will have a great impact on your ability to qualify for a mortgage. I can say one of the top reasons why people um, well, I should say one of the biggest obstacles that's stopping people to get a house most of the time, it's taxes because you don't think about that until it's time to purchase your house. And by then it's probably too late. There's nothing you can, I mean, there are things you could do, but it could be a little harder for you to get your taxes fixed by then. So what should you know about taxes? Like I said, you will have to provide your tax documents when you are purchasing a house because the lender wants to see your yearly income. That's the way they come up with how much you make. Yes, they will look at your pay stubs, but that's more to see where you are. Let's say if you were like in the middle of the year looking at buying the house, then they will check your tax return to see your current income. But they need to verify that you have a stable income. So for that, they will have to look at your tax return because at the end of the day, that's how you declare your income. So what you should know about taxes. First, let's talk about W-2 holders. So a W-2 holder will be anybody that works a job. So if you work a regular job, 9 to 5 job, or you get paid through your employer, you get a W-2. So when you are buying a house as a W-2 holder, you will have to show your tax return. So make sure you file for your taxes. It's very important. If you never filed your taxes before you start thinking about buying a house, it's a great idea to sit down with a tax expert or a CPA to talk about how to get you current on your taxes because that will be important. So when you're a W-2, it's actually it's a little bit easier for you to get approved for mortgage when you have a W-2 because it's pretty straightforward. Your employer pays you, they pay for your taxes, it's straightforward. So you should be good there. However, few things that I've noticed. Um, some people, not you, just some people, get a little greedy and they try to get the most return for your taxes, or they try to, I guess, pay the least amount of taxes possible, which is very understandable. Most people don't want to pay a lot of money on taxes if they don't have to. So that being said, they can get very creative on making things up to file their taxes and just to get the maximum, I guess, return and pay the least in your taxes, which is great. It's fine, I guess. But if you are planning on buying a house, I will highly recommend you get your taxes straight, at least for that, at least if anything, at least for that purpose. But personally, I highly recommend that you file your taxes correctly. If you are trying to save on taxes, there are legal ways to do so. So get with a knowledgeable tax expert to do that. Don't go to your cousin, your sister, or your neighbors to do your taxes. And sometimes, one, they might not even be experts in doing taxes, and they can be doing some shady things that you don't know about. But guess what? This is your taxes. You will be responsible. So it's two things. It's either you can, you know, get be exposed to the risk of being audited by the IRS. That's a whole other subject, in which case you will have to pay every single penny that you took from them for however long. They will go back for however long they need to go back. So for me personally, it's not worth it, but to each their own. Let's come back to real estate. But as far as real estate, you will have to get your taxes right, because if you did anything funny in your taxes, mortgage underwriters are like FBI. They will look through everything to make sure it's done right. So, yeah, you want to make sure your tax documents are done correctly if you are planning on buying a house. That's that's that. That's W2. W2 is pretty straightforward. It gets more complicated when it comes to self-employed, business owners, contractors, gig workers, 1099 workers. So anybody that paid their own taxes, like anybody who don't work a traditional job and has to pay their own taxes. I can say probably one of the top reasons why it's hard for business owners and entrepreneurs to qualify for a mortgage is because of taxes. So as a business owner, it's critical for you to get your taxes right. Few things you need to know. Your taxes are how they look they your taxes are how they know how much money you make. That's how they verify your income. So as a business owner, your taxes need to be right. So as opposed to unlike W-2 workers, when you are a business owner or an entrepreneur, you will be asked for at least 3 years taxes. So you see how important it is for you to get your taxes right. So, but one of the most, I guess, the biggest pitfall downfall for business owners as far as taxes is deduction. So you are a business owner, you file your taxes. Chances are you don't want to pay a lot of taxes like most people. So you do what most business owners do, they report a lot of deductions, a lot of expenses. So what that does, it cuts into your income. So when the mortgage lender is looking at your income, they don't look at how much you made as far as your gross income. They look at your net income, meaning what was left after your expenses. So if you show a lot of expenses, it can be hard for you to qualify for a mortgage or to qualify for the amount that you like based on your income. It will be hard. For example, if you are a business owner and let's say you make $100,000 a year and you show that on your taxes, so you start filing your taxes, you report your gross income of 100,000, but then you turn around and show $80,000 as expenses, meaning you're telling the IRS, well, I made $100,000 this year in my business, but really, 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 I only made $20,000 because 80,000 of that money was just expenses. So that's fine. That's fine. But what you need to know is a mortgage lender will only look at your net expense, meaning what's left. I mean, your net income, meaning what's left after your expenses. So in this scenario, the lender will not consider the $100,000 you made on a regular loan, on a traditional loan. They will not consider the $100,000 you made, they will however, they will look at the $20,000. They will consider the $20,000 as your real income. So that means you can't qualify for no home, even though yes, you're making a lot of money, but you are not paying taxes, and they only go based on base. They only base their evaluation on your tax return. Mm, So nothing else that you can say would change that. So they will look at what you show the IRS. In some cases, you might even have to show like, because I know people get a little clever with their taxes, and the mortgage companies know that. So sometimes they will even ask you for your tax transcript, not the paper that you bringing to them and showing them from your tax preparer. They will ask you for your IRS transcript because they look at how much money you made after your expenses, after everything. So it's important for you to keep that in mind as a business owner. Be very mindful of those deductions that you are making when you are in the process of purchasing a house. If you have, maybe you would like to know more about that, I'll be more than happy to elaborate on this subject. Make sure to leave me a comment and let me know if you are a business owner and you ever had any issues qualifying for mortgage because of tax issues, or if you have any other questions about taxes and how they can impact your ability to get pre-approved for a loan. So I don't know how long I've been going, but I promised this wasn't going to be very long. So yeah, that's all I have for you. In conclusion, just remember it's the end of the year. Before the year end, make sure that your income and all your sources of income and everything is accounted for in 2020 before you file your taxes, and make sure you file your taxes correctly. Be mindful of your deductions and your expenses because a mortgage lender will only consider your income after your expenses as your real income. So that can affect your ability to get qualified for a mortgage loan. It can also affect the amount you can qualify for to get a house. So that means you could be making $100,000 in a year, and you probably want to live in a $400,000 or $500,000 home, which is nice, but the bank will only look, a mortgage lender will only look at the $20,000 and approve you based on that. So even if you did get qualified with that income, you might not qualify for much money, or the money you qualify for might not get you the house you want. And that can be very frustrating for a lot of business owners. That's it. Like I say, I promised this wasn't going to be a long live. I hope this was useful. If you got any value from this live, please let me know in the comment. I love feedback. I love to know that my content is relevant to you. And that being said, thank you so much for your attention. Thank you so much for watching. If you are watching this in replay, I appreciate you, and happy holidays, and be safe, and don't spend money on things you don't need. Remember that. Thank you so much, and I'll see you on my next video. Bye. Have you end live here? Okay, I'm not sure how to end this live.